Good morning, everyone. Welcome to today's class. Today, in Principles and Practices of Financial Accounting, we'll be looking at the topic accounting for non-for-profit organizations. In this chapter, we'll look at receipt and payment accounts, income and expenditure accounts, membership subscription, bar trading accounts, live membership, and accumulated fund and equity reserve fund. So, introduction. What is not-for-profit organizations? When we hear the word accounting and we hear the word financial records and keeping the books, what comes to our mind first is, okay, at the end of the day, we are supposed to ascertain the profit of the organization. So what now happens when we have a scenario where we have an organization that is not established for profit making? So we call non-for-profit organizations are those types of organizations that they are established not for the purpose of profit making, but for to render services and in some cases products for the good of the society. So examples of non-for-profit organizations, we have government-owned hospitals, we have voluntary health and welfare organizations, we have NGOs and the rest. So their primary aim for existence is not to maximize profits, it's not wealth maximization, but to render services. So they are categorized as not-for-profit organizations because their main aim is not to make profits, but to render those services. So like we have in government hospitals, the main aim is to cater to the needs, the health needs of its citizens, and not to maximize profit. So in Ghana and Nigeria and other West African countries, citizens depend heavily on such entities for religious, educational, social, and recreation needs. So even religious organizations fall under the category of non-for-profit organizations. So examples of other non-for-profit organizations include, we have private and community foundations, professionals, research and scientific organizations, social and country clubs, trade associations, labor organizations, political parties. These are examples of not-for-profit organizations. They are established but not for profit-making motive. So it's not only profit-making organizations that need accounts. Yes, because one would say, okay, since these organizations were not established for profit making, then there is no point having accounts for them. But it's not true. So organizations are set up for purposes other than profit. They also need to tell their stakeholders how they have dealt with the funds that have been contributed. Now, so long as any group or organization is handling money, so long as money comes in and money goes out, okay, this inflow and outflow of cash, then that organization or that group, that entity, they need to have proper financial records. So the legal status of each entity is usually spelled out in club rules or regulations. Students must, however, remember that external financial information provided by such organizations must be in conformity to generally accepted accounting principles. So long as we have stakeholders who are contributing money, for example, we could see, for example, in motherless babies' homes, people contribute money, they give a cash gift. All right. So long as you have people that are sending in money, now these people who are giving money, we want to know what their money is used for. So they have a right to have a financial statement that shows them, okay, this is how this money was spent, this is how much this organization has made, and this is how much has been expended. So this legal status is usually spelled out in the club rules and regulations. Now, the mere fact that these organizations are not for profit doesn't mean that their financial statements will be prepared haphazardly. So this information must be prepared in conformity. It should be in agreement to what we have as a generally accepted accounting principle known as GAAP. So they don't just do it the way they want to do it. It must be in line with the generally accepted accounting principle. So that is why this topic is very important. It's vital. for accountants to learn. So the accounts of clubs, societies, and charitable organizations may consist of the following. We will have a receipts and payments account, we have income and expenditure accounts, and then we also have the statement of financial position. Now, the names may sound different, but the treatment is not entirely different. You'll be able to relate it with the things, with the different accounts that we've done already before. So, what is receipt and payment account? It's a statement of cash actually received and paid during a given period. I know we know cash book, we've done cash book before. So what is cash book? Cash book is recording money that comes in and money that goes out. So cash book, just like the name entails, is cash. So whatever is not cash is not reflected in the cash book. So the same thing applies in receipts and payments account. This account is more like a summary of a cash book. It shows money that has actually entered into the account of the organization, and then money that has been used in that period. So it's more or less a cash book. So what comes in is the receipt, and what goes out, that's what we services we pay for, the expenses we've incurred and we've actually paid for, not just incurred, expenses paid for is reflected in the receipts and payments account. So it shows the opening and closing balances of cash in hand and receipts and payments of any kind and on any account made during the period. So this is just an example of what the receipts and payments account looks like. So it's also, we have the debit side and we have the credit side. That's why I said it is just like the cash book. So I'll give us a second to just look at it and go through it, and then I'll continue. Okay, so in the debit side, that's the left-hand side, we have the column is titled receipts, and then we have on the right-hand side payment. So receipt records what comes in, while the other side records what goes out. So we have in the receipts column, we have bank balance. That is the balance that has been brought forward. That's what was left in the previous period is now brought into this period. That's 118,000. Then sponsored work. You know, some clubs will have work, and then maybe a road walk or some kind of rally or something like that. And then these activities are sponsored. So those who sponsored the activity gave us 23,000 naira. Then subscription, you know, for organization, for example, club members have to register. So this registration could be yearly, could be monthly, it could be bi-annually, and the rest. So when members pay, renew their subscription, it is an income because money is coming into the organization. Then we also have sundry income, all those incomes that comes into the organization. Then we have sale of club's material, manual. So we could have, let's say, it's an anniversary, or there's a monthly magazine that is being published by the organization or by the club. Okay, so when we sell the magazine, of course, there's a profit element attached to it. So as the money comes in, as we sell the manual, money is coming into the organization, and as such, it is an income. Then we also have sale of equipment. It's possible that the organization might decide to sell one or two equipments that they have. So when they sell the equipment, the money that comes in is the money that we've received from that sales is an income and is a receipt. So it's recorded on the debit side of this account. So to the credit side, payment, printing and stationery. We spent 228,000 naira on printing and stationery. Okay, so since the money was going out, because when you go to print, you pay money. Okay, so we spend that amount of money. So money is going out, so that's why it's recorded at the right-hand side. Then management expenses. You know, there are those expenses that are being incurred. It could be meeting allowance, okay. It could be traveling allowance for the management. You know, those expenses that are being incurred. So long as they are expenses, it's recorded at the right-hand side. The caterer for President's Ball, we had let's say a dinner party, okay, and then we had to employ the services of a caterer. So we paid the caterer 113,250, and then since money is leaving our hands, so it's on the credit side. Then we also paid for electricity and water. Money is leaving our hands, and we also have what we call bar payables. Then the bank balance. Now this bank balance is like is the balance brought down, okay, at the end of the period. So when we solve, we are going to have an example that we are going to solve the receipts and payments from scratch. This one was just to let us know how this account looks like. So what are the features of receipts and payments accounts? Number one is a summary of all cash receipts and payments, whether it is capital or revenue in nature. Then number two, it shows the opening and closing cash and bank balance. Number three, it does not distinguish between capital and revenue items as in the case of income and expenditure accounts. And number four, it is easy to prepare as it does not require the complex application of double entry or accounting conventions. So one might be wondering, what's the difference between receipts and payments accounts and income and expenditure accounts? Okay, so over to the income and expenditure account. Income and expenditure account is the equivalent of what we have in the statement of profit or loss account. Okay, profit or loss account. It contains only revenue items, being debited with all expenditure and credited with all income of a period, whether or not it has actually been paid or received within that period. We've done statement of profit or loss. Now, in this one, we will record in a non-trading organization, we always have the net profit at the end of the day. That's the income less the expenses. So now, what's the difference between this account and receipts and payments? Remember, I said that in receipts and payments account, you record cash transaction, only cash transaction. Okay, so here, while in income and expenditure, we contains only revenue items. In receipt and payments account, you will not record depreciation. Why? Now, this is because depreciation does not result in the movement of cash. Okay, you don't have movement of cash. It is just an accounting assumption, accounting policy. Okay, so meanwhile, it is going to be reflected in the income and expenditure account. So this is the difference between income and expenditure accounts and the receipts and payments accounts. The other one records only what brings about movement of cash. But the income and expenditure accounts, we have provision for bad debts and all of those entries, which does not bring about movement of cash. So that's the difference between income and expenditure accounts and then the receipts and payments account. So the final balance of an income and expenditure account represents the excess of income over expenditure, that's surplus, or deficit, which is the excess of expenditure over income, as the case may be for the period. So this balance is similar to the net profit or loss of a trading concern. So, membership subscription. Like I said, a club or society receives payment from members for benefits which members have enjoyed. So annual membership subscriptions of clubs and societies are usually payable 1 year in advance. So for example, now in ICAN, qualified members pay yearly subscription, and then your subscription is due every first January of a new year. So by 2nd January, if you've not paid, you're already owing for that year. Okay. So you pay, like now, this is 2022. We have to pay for last, you have to pay ahead before the year. We have to pay by January. Now, the year, we still have 12 months, okay, for this year, but you pay before the end of the year. We don't pay at the end of the year. Something also applies in payment of rent. It is usually paid in advance. So such payment in advance by members is shown as liability in the statement of financial position. This is because the year's membership has still to run as at the year end. So a large number of club subscriptions in arrears may never be received, and the financial position of the club or association could be distorted, since such amounts are usually shown as assets in the statement of financial position. So it's collected in advance because once it becomes arrears, it's usually it's not easy to receive the monies back. So this is okay. The receipt and payments account for the period. Okay, so this is a extract from the membership subscription book. Let's prepare a membership subscription account. Okay, I'll give us some seconds to go through the question and then we'll read and solve together. Okay, extra from the membership subscription book revealed that subscriptions due from members amounted to 80,000 on the 12th December 2010 and 120,000 cedis on 31st December 2011. The accounts clerk recorded subscription of 21,500 cedis and 109,000 cedis in respect of subscriptions that have been paid by members in advance for 2011 and 2012 respectively. So the subscription accounts we prepared as follows. I'm only going to show us how the subscription account looks like, and then we're going to have an illustration where we will have to prepare the subscription accounts from the scratch. So this is what subscription account looks like. Okay, we have the balance brought forward. We have the income and expenditure account balance carried forward. Now, all of these will be explained when we solve the illustration question. Okay, bar trading account. What is bar trading account? It is not uncommon for clubs and associations to engage in other income generating activities to raise additional revenue for the effective running of the club. These other activities are done with the sole aim of making profits. So, for instance, the aim of a local trade union is not to make profit, but the union may operate a bar. So, alongside its activities with the object of making profit, the profits will not be distributed among members, but rather used for the purpose of the union. Now, what this means is that we know that these organizations are not established for profit making. But however, they could have some other activities, such activities that is done with the aim of generating revenue for the organization. Now, so since this is different from the non-for-profit organization, because the previous one, we're not making profit, but then we are engaging in activities that has to do with goods, services that the sole aim is to maximize profit. So these accounts, the accounts for these activities will be treated separately from the other ones. We have a question that we will be able to solve this from the scratch. So if a club has a bar, a separate statement of profit or loss account will be prepared for its trading activities. The net profit from the bar activities is then included as income in the income and expenditure account of the club or association. So any loss will be shown in the expenditure side of the income and expenditure account. So when we have the profits from this bar trading account will be reflected in the income and expenditure account, and also the losses. So life membership. Now, membership dues usually paid, like we said, in advance. It will be paid yearly. Some persons can pay for 5 years, while some uh, can have the subscription paid once and it's for their entire lifetime. Okay, so this one also is payment in advance. You could decide to, uh, for example, they paid 1 million, and this 1 million to serve for, let's say, 50 years. So we would decide to divide this 1 million by 50, and then apportion it in equal proportion over the estimated membership life of such members. So we also have what we call accumulated fund or equity reserve fund. It represents the opening capital of a not-for-profit making organization. It has the same meaning ascribed to the capital accounts of a sole trader and partnership, and is calculated as the difference between total assets and liability. So here we don't have what we call capital, because capital is what we usually know as what we use to start a business, shareholders, funds, equity, and the rest. So we don't have capital. We don't use the term capital here. What we use here is what we call accumulated fund or equity reserve fund. That's what is reserved, has not been used completely in the previous period. So it's the term that we use in not-for-profit organizations and not capital. So for this reason, the procedure for preparing the accumulated fund of a not-for-profit organization is the same as that of statements of affairs as obtained under incomplete records. So we don't have capital, we make use of accumulated fund. And then how do we arrive at this is the difference between total assets and liabilities. Okay, so we'll go over to the illustration where we'll uh, assess all these different accounts and treat them accordingly. Okay, so this is the question. I'll give us a minute to go through the questions and then I'll read and solve them. Okay, please can someone read the question for us? Okay, I'll read it. Illustration one. The following is the receipts and payment accounts for the Victorowski Fund Club for the year ended 31st October 2015. So we have receipts here. This is the receipts and payments account. So receipt is what came in, like I said, and then payments is what we use the money for, the expenses we incurred. So more like the cash book. These are still parts of the payment that was made, all figures. Then the following additional information has been given. Current assets and liabilities are for 2014 and 2015. We have bar inventories, bar payables, subscription in arrears, subscription in advance, light and cleaning owing, insurance prepaid, petty cash float, cash in hand, bank balance. Then the petty cash float is used exclusively for telephone and postages. The club started constructing its clubhouse during the year. The project will take 4 years to complete. Amount owed for building materials supplied at 31st October 2015 was 511,500,000 cedis. Wages owed for October 2015 was 175 million. Inventory of materials at the end was 220,500,000 cedis. Number 4, tickets for the president's ball were sold at 300,000 cedis each. The club engaged the services of a caterer who agreed to charge on the number of plates served under the following conditions. First condition was that if our order is below 1,500 plates, the amount to be charged per plate will be 250,000 cedis. If it's from 1,501 plates to 2,000 plates, the amount to be charged will reduce per plate and we will have 220,000 cedis. So if we are making orders for over 2,000 plates, then the amount she will charge per plate will be 200,000. And of the 2,400 tickets sold, 90% attended the function and were served. Okay, this means we have to do lots of workings. Then number 5. Depreciation of equipment is to be calculated at 10% per annum on written down value. The club's equipment was disposed of during the year had a carrying value of 9,905,000 on 1st November 2014. Subscriptions in arrears for more than 1 year are to be written off. An amount of 1 billion cedis is to be transferred from accumulated fund to building fund. Investment in ABC Limited is expected to be held for at least 5 years. Included in subscription is an amount of 192 million in respect of 2014. 10. Rent paid represents 1.5 hours to 30th April 2017. So required: A. Prepare accounts showing the profit or loss on bar operation and president's ball. B. Show the accumulated fund as at 1st November 2014. And C. The income and expenditure account of Victorowski Fund Club for the year ended 31st October 2015. And will also prepare the statement of financial position as at that date. So we'll go over to the Excel sheets for solution. Oh, my God, Google free. So our first is that we should prepare account showing the profit or loss on bar operation. Okay, so we prepare the income statement. We ask to show the profit or loss on bar operation and president ball. So first of all, we'll start with the heading. Income statement. For the year ended 31st December 2015. Okay, so we'll have our column first of all, the currency sign. It's very important. 1 mark. So I've carried some zeros up because the figures are actually really huge figures. We have billions, we have millions, and the rest. So income statements is what income and then expenses. Okay. So what's the income here in this? The income here from our question. We have sales of tickets, sales of tickets, additional information 4. We have sales of tickets. They sold at 300,000 naira each. And we're told in additional information 4, the C part, that 2,400 tickets were sold. 2,400 tickets were sold. Okay. Here. Now, how do we know? Because I said 2,000 tickets were sold. So 90% people attended the function, but 2,000 tickets were actually sold for this event. So sales of tickets, we now have sales of tickets. We have 2,400 tickets were sold, remember? 2,400 tickets were sold, and it was sold at, they were sold at 300,000 cedis. Okay, so 2,400 times 300,000 will give us 720,000. 720 million. Okay, remember we've carried 3 zeros up, so we have 720,000 here. Okay, we sold this ticket, 720 million tickets. Then, in income accounts, like we said, income and expenditure account is more like the profit or loss account of the trading organization. All right, so in profit or loss account, we already have sales, we have less cost of sales, then add purchases and the rest. So in this case now, we'll check, do we have any do we have what can be categorized as cost of sales? What are those costs that we incurred as result of this selling for this event? So cost of meals served, we have cost of meals served. We served meals and the meals cost us some money. So cost of meals Okay, so in additional information 4, we're told that the caterer gave us conditions. He said, if we are buying below 1,500 plates, she will charge 250,000 per plate. If you are buying between 1,501 plates to 2,000 plates, she will charge 220,000 cedis. But if we buy above 2,000 plates, then that means she's going to charge 200,000. And we're told that 2,400 tickets were sold and 90 people attended the function. That's 90 people attended the function, and it was 90%, sorry, that were served in this event. So how many people attended the function? We sold 2,400 tickets and 90% attended. So for us to know the number of people that attended the event, we'll have 2,400 tickets divided by, multiplied by 90%, multiplied by 0.9. Then we'll have 2,160. Okay, let's go back to our Excel sheet. Okay. So we have I could do this as a working down here. Number of persons, number of guests that attended. The event. So how do I arrive at that? We have 2,500 tickets sold. Okay. And then we're told that 90% attended. So how many people attended the event? Since we sold tickets to 2,500 people, but 90 attended. So how many people attended the event? We'll now have 2,500 tickets multiplied by 0.9. Okay, 0.9%. So that will give us 2,160. Yes, so we have 2,160 people that attended the event. So from the condition she gave us, she said if we are buying above 2,000 plates, she will sell for us at 200,000 naira per plate. So cost of sales here will be 2,000 2,160 multiplied by 200,000 cedis. So what will that give us? We'll have 432 million. So it's minus. So you either include brackets or you write less. So 720 minus 432 gives us 288,000. Okay, then less expenses. So less expenses. So which other expenses do we have that pertains to the ball? We'll go through our question again. Which expenses has to do with the ball? That is why in the exams, you have to go through the question first. Study the question from beginning to the end before you start solving. Because as you are looking at the question, the requirement, look at the question, you'll be able to see the different figures and what it relates to. So now, we have sundry expenses, 5,275. Let's go back to the, okay, let's finish. Then we also have hiring of hall for president's ball, 20,000. Now, one might ask, in the what we just finished calculating now, the cost of meals is 432,000. All right. Meanwhile, in the receipt and payment account, we've seen that caterer for President's Ball was just 250. Why? Now remember that I said that in receipt and payment account that you record what the cash transaction. So the caterer has been paid 250,000 already, but his bill, what we are supposed to pay him, everything altogether is 432,000. So that's why we did not carry this 250,000. We not use it in our computation because that could be the first advance that he was given in order for him to serve at the event. Okay, so we have sundry expenses 5,275, and then we have hiring of hall for President's Ball. So back to our solution. Okay, sundry expenses five 275. Then for hiring of hall, we have 20,000. So if you add both of these together, we'll have 25,275. Subtract it. Subtract it, and we have 262,725. So this is the profit. And it's going to be reflected in the income and expenditure account. It's an income and expenditure account. Okay. So we're asked to prepare for bar trading account and for the President's Ball. For the second thing in the first requirement, we are preparing the bar trading account. Okay, back to our question to see what and what pertains to the bar trading account. So we'll go through the equation and look at what pertains to bar trading account. Okay, we've seen sundry bar expenses. This one is for expenses. We're looking at income. Okay, we're looking at income first of all. Okay, so we've scanned through the whole question. So back to our receipt and payments account. Now look what has to do with bar in the receipt and payments account. Under receipt, we have bar takings, 510,000. 510,000. So we make use of that. Take note of that. Then we'll also check for what else. I mentioned bar sundry bar expenses, which is 303,360. Okay. Then we have, I saw a steward salary, bar steward salary. We have 69,600. So these are the figures we're going to use. So let's go over to our solution. So bar takings, from where you saw it was in the receipt section, so it's an income. Bar takings, we have 510. Okay, that's like what we have like sales in statements of profit or loss. That's like sales. Then after sales, we usually have what we call cost of sales. That's the opening inventory, add purchases, less closing inventory. Okay, so let's check. Do we have any opening inventory? Opening inventory. Yes, we have 27,000. Okay. Then add purchases. Add purchases. Let's go back to the equation. Now, bar inventories. We have purchases, right? So this is 27,000 as at 2014. Closing inventory. Closing inventory of last year is the opening inventory for the current period. Okay, so this 27,000, which was 2014, the closing inventory for 2014, is now the opening inventory for 2015. That's why it is used as opening inventory. Okay, so add purchases. Add purchases. We were not given a straightforward figure for purchases. Okay, so we will have to derive it. So how are we going to derive this bar purchases? Okay, we're going to work it out. We're going to work it out. So let's check our receipts and payments account if we have anything on that. We don't have purchases, but we have payables. We have bar payables. Payable simply means the amount of money you are owing, the amount of money you are owing to your creditor. So that means we made purchases from creditors, from our suppliers on credit, and it amounts to 280,000. Okay. So over to this additional information, the bar payables here for 2015 is 33,000. That means what is left for us to pay at the end of the period. So the one in the receipt and payment account, the 280,500, is the one that has actually been paid because it's in the receipt and payment account. So the cash has already been paid. So after we've paid that one, we are left with 33,000 naira to pay at the end of 2015. Okay, so we can use this to figure out what is purchases. And then the payables for 2014 is 18,000. That's for the previous year. So back to our solution. So let's have our workings. Yeah. So the payables, that is what's for us to pay. You know, okay, so payables for 2015, that's at the end of the period. How much we are owing the supplier is we are owing supplier 33,000. Then in the receipts and payment accounts, they had paid the supplier 280,000. Okay. All right. So if you add both of these together, we have 313,500. Okay. So less payables. Now, this is the amount of money. Now, what was left? What is left that we've not paid? We've not paid 33,000, and then we've paid 280,000. So the amount of money that we've incurred in the period is 313,500. So we've already last year, that's ending of 2014, the payables was 18,000. I remember that closing inventory of last year is opening inventory of this year. So for us to have even, that means the 18,000 that we were owing last year, we have paid for it in this payment, this 280,500. Okay, so we are going to remove it. Payables 2014, that's 18,000. So when we deduct, it will have 295. So this is the payables, this is the amount of money we spent as purchases. So the goods that we purchased in this period is goods worth 295,500. Say this. Okay, so opening inventory, add purchases, 295,500. So when we add, we will have 322,500. So less closing inventory. That's survival cost of sales. Less closing inventory. We have 36,000. So the difference gives us 286,500. So we have 223,500. So as part of the formula for statement of profit or loss trading account, we now go over to less expenses. So every expenses that we've seen that has to do with the bar, we will less them here. So we have steward salary, which we saw in the question. Steward salary is 69,600. Sundry expenses 3,360. So adding both of them together, we have 72,960. So deduct them. So 223,500 minus 72,960 gives us 150,540. So that is the profits in the trading account. So the next question, option B, says we should calculate the accumulated fund as at 1st November 2014. Accumulated fund is at 1st November 2014. Remember that I said it is assets minus liabilities. Assets minus liabilities. Okay. So back to the equation, so we can have a glance, take a glance at okay, these were the current assets and liabilities for the two periods. Okay, so current assets and liabilities, this is what we have. So the assets here, we have bank balance for 214, cash in hand. These are parts of the inventory. Petty cash, part of the assets. Petty cash, insurance prepaid, it's also assets. Okay. Then light and cleaning owing is liabilities. Bar payables, liabilities. Subscription in advance, liabilities. Okay, so these are all liabilities. So what we just do, we just add and subtract. Then we had an additional information. That the club's equipment was disposed of during the year. The club equipment that was disposed of during the year had a carrying value of 905,000 on 1st November 2014. Remember that this equipment was disposed in 2015. So as at 2014, it is still recognized as an asset. So back to our solution. So asset equipment 9,905. Cash in hand 15,565. That's for 2014. Bank balance for 2014 246,500. Inventory 27,000. Subscription, these are all assets. Subscription in advance, sorry, not in advance, subscriptions. We had two subscriptions there. So the one that is an asset is the subscription in arrears. The one in advance is a liability because it has not yet been utilized. So prepaid insurance prepaid. $4,200. Then petty cash 3,000. So add all these assets together, we have 546,170. Okay, then the liabilities, bar payables, Bar payables, that's for the liabilities. We have bar payables as 18,000. We have lighting and cleaning, owing 4,200. Then subscriptions in advance. We have 150,000. So if you add three of them, we will have 172,200. So subtracting that will give us 373,970. So this is accumulated fund, also known as equity reserve. So the next one, we're asked to prepare income and expenditure accounts for the year ended 31st October 2015. To Victorowski, income and expenditure account. Okay, so it starts with income. So we have, from our question, we have sponsored work. Sponsored work, 478,802. We have sundry income, 75,000. Then the profits we had from the bar trading. Remember from the bar account we did, we'll bring them here. 150, 540. Then profits on President's Ball. We had 262. These last two figures are from the first two solutions we did. We also have subscriptions. We have different figures for subscription. So we will have to prepare subscription account. So working B, subscription. So back to our question. Okay. So we have subscription in the receipts section. 1,643,560. That's in the receipt and payment account. Let's check for other places that we have subscription. We have subscription in advance and subscription in arrears. Back to our solution. So we're going to have a T account. One section for debit and the other for credit. So balance brought forward. So we have two types of we have subscription in advance and we have subscription in arrears. Now, what the one that reflects the balance brought forward here will be the balance of the subscription in arrears. Okay, because it is an income, like I said, it's an asset, it's just coming in. Okay. So the balance brought forward, that's the balance of previous year, which is 2014. It's 240,000. So if the balance brought forward is here, then the closing balance will be at the other side of the cash book of the account. So balance carried down. That's for that year. Then that's carried down. Is the opening balance of 2015, which is 360,000. Okay. Then we also have subscription in advance. For 2014 is 150, for 2015 is 210. So subscription in advance is a liability, okay, because it has not yet been enjoyed. So the balance brought forward for liability, but liability is recorded on the credit side. So the balance brought forward, let me put in brackets advance. That's subscription in advance. Is 150. $450,000. Okay. Then we had a figure in the receipt and payment account. Subscription in the receipt and payment account that was given in the equation. $1,000,000 643 560. You might be wondering why would the subscription was reflected as in under receipts in the receipt and payment accounts, but right here it's now on the right hand side. Now, this subscription account is to show how much, let's look at how much we have pending that people have not yet paid. So the balance brought forward is the arrears. That's what we are still expecting people to pay. Then for this other side, that's the credit side, is the one that has already been settled. So that's why the subscription here, the 1,643,560 has already been paid. Okay, so that's why it is exiting the subscription account. We are removing it from the subscription account so that we know how much people are actually still owing us at the end of the day. Okay, so we have so having had this, we will now add and subtract from the both sides so that we will have our figure for our income and expenditure account. So the subscription in advance had a balance for the following period. That's balance figure for 2015. That's the balance carried down. And just 210,000. Okay, so this is the one input in bracket advance. Okay, so yeah, so we'll add 150. Then we'll now check, do we have any bad debt on subscription? Whatever has to do with bad debt on subscription. Let's go back to our question. Was there any bad debt on subscription? We'll check additional information too. Okay, we're told that subscriptions in arrears for more than 1 year are to be written off. So when there's any subscription that is an outstanding for more than 1 year, we are to write them off. So we'll check, is there any subscription that has exceeded 1 year? So number 9, included in subscription is an amount of 192 in respect of 2014. Okay, 2014. Uh, they're still owing 192,000 that has not been paid, so we will have to write it off. So bad debt. The figure for that year. Let's go back to our question. Let's make reference to the question, please. Said included in subscription is an amount of 192 million in respect of 2014. And this account is being prepared for 2015. Okay. So the one that we have out of 240 million for 2014, 192 is for 2014. So that means the surplus is the one that has been recouped from the previous year, which is 2013. So only 192 belongs to 2014. So we'll have bad debt will be 240, 240 minus 192. That gives us 48,000. All right, so we'll add the credit side. 150 plus 1,643,560 plus 48,000 plus 360,000. gives us 2,201,560. Okay, so to get for this side, that's the income and expenditure account. Well, now 240 plus 210 gives us 450,000. So 2,201,560 minus 450 gives us 1,751,560. Okay. So if we add both sides, we'll have the same figure. Okay, this was a working. So we go back to our main work. So subscription is 1,751,560. Then as part of let's check if we still have any income. Okay, we have raffle. Okay, raffle here is 183,030. Do we have any additional information on raffle? So let's check if there's any additional information on raffle. Okay. So our raffle here is 183,030. Then prices of raffle 21,000. So people have bought raffle tickets for 183,000, and so far the prices that have been won is 21,600. So we'll have to subtract it from the income. Minus the price, which is 21,600. Okay, so we have 161, 430. So adding everything, we'll have 2,880,057. So that's total income. So over to expenditure. So expenditures, we have bank charges. Bank charges is 36,000. Printing and stationery, We have it 59,160. Donations 50,000. Secretary's salary 120,000. Insurance insurance. From our question, we have additional information concerning insurance. We have insurance here in the receipt and payments as 18,000. We'll have to do workings on it because we also have insurance additional information prepaid. Okay, so for that, in our solution, we're going to have the insurance figure that we have 18,000 from the receipts and payments account plus 4,200. That is for 2014 minus 5,200 because what we are owing at the end of the period is 5,200. So we want to know how much we've paid during the period. So what we were owing last year plus what was paid this year minus what we are owing, we'll be able to know how much we have paid as the insurance for the period. Okay, so we have 17,000. Then we have light and cleaning. Light and cleaning. We have additional information because we have figures in the receipt and payment account and also in additional information. This is light and cleaning in the additional information. We had for 4,200 for 2014 and then 6,800 for 2015. In the receipt and payment account, lights and cleaning 32,640. So it will be 30,640 plus last year's figure for lights and cleaning minus the 6,800, which is the closing balance for this current period. So we have 35,000. 240. So we have depreciation. Depreciation on the assets was 10%. 10%. So 10% of 67,800 gives us 6,700. 780. Okay. Then we also have telephone and postage. So it will be, we're going to add the petty cash of 2014, which is 3,000, plus receipts and payments of 65,000, plus, okay, minus the petty cash of 200 of 2015, which is 1,000. Then we'll now have 67,000. We have a bad debt, which you already solved, which is 48,000. We also have rent. We're told that the rent figure that was given, which is 360,000, was for 18 months. 18 months. So we are calculating these accounts is for a yearly basis, which is 12 months. So we remove 12 months of 18 of 360,000. Twelve divided by 18. Okay. So that will give us 240,000. So the equipment that was sold, there was a loss. We sold below what is, we sold below the carrying amount. So the carrying amount was 9,905, and we sold it at 7,925. So 7,925, 923 rather, minus 9,905. This gives us 1,982. So adding all these expenses, we will have 681,161, 162 rather. So our income was 2,880,057. So let's sit with from that minus the expenses. We are going to have 2,198,895. So this is the surplus of income over expenditure. So this is how to prepare the income statement for non-for-profit organization. So we've come to the end of today's class. We will continue in our next class. Thank you very much.